Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Zoetis. Beef demand continues to struggle in 2013. Grocery store and restaurant segments continue to experience slower year-over-year growth compared to late 2011 and early 2012. The latest monthly U.S. Census Bureau retail sales data shows the 3-month sales growth in each segment has slowed to the lowest levels since fall 2010. Unlike the 2009 recession, sales are still maintaining year-over-year growth, but it's occurring at a much slower pace. Grocery store sales over the last 3 months have a year-over-year sales growth of less than 2%. Food service and drinking store sales are growing at 4.4%, and these numbers represent a 5.5 percentage point drop in sales growth since the recent highs 18 and 12 months ago respectively. The data has important implications to beef demand. In particular, food service sales growth peaks in 2000, 2004, and 2012. Each of these peaks correspond with recent peaks in wholesale beef demand. Wholesale beef demand is generally less responsive to increasing grocery store sales. This is likely due to the type of products sold in each segment. Retail and food service stores each account for around 45 to 50% of all beef sold on a volume basis. However, food service generally accounts for higher valued sales on a per pound basis. Consumer incomes are expected to be down 1% in 2013, and the effect of less take-home pay is showing in the sales figures for the beef end user segments. Expect sales growth as well as wholesale beef demand to be less than year-ago levels until consumers adjust spending levels to reflect lower incomes. The fed cattle market was mostly $2 lower this week, as live sales were established at $124 to $125 per hundredweight. Dress trade occurred primarily at $198. Feeder cattle prices were $3 to $5 lower, while calves were $3 to $7 lower, and discounts were the largest in the southeast. Slaughter cows were steady to $3 lower, and boxed beef values traded lower on the week as well. Weather in the Central Plains and East remains cold, and sellers focused on purchasing for Easter needs. That usually means more pork purchases rather than beef. Corn prices rose this week due to continuing tight old crop supplies, and the USDA released its monthly cattle on feed report this afternoon. March 1st feedlot inventories were reported at 93% of a year ago, while trade estimates averaged 93.5%. February placements were at 86%, and industry expectations were at 91%. Finally, February marketings came in at 93%, while analysts forecasted an average of 92.7%. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than equipped with the industry's most powerful database, our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor. 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information.
90